Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Rosco Graves. He's the founder and CEO of Polaxis Professional Services. And we're going to talk all about things about business, growth, financials, and just really see what we can do to help you guys, really hone in on the financial side of your businesses. So thank you for being here today, Rosco.
Thank you. Thank you for having me. I'm glad to be here.
Yeah, we've chatted a little bit before on a pre-interview call, and you and I were just chopping up before. So if you see us kind of laughing, that's what we always do that right before the show. I love to tell people kind of the origin story and how you ended up on a show about mergers and acquisitions, right? You have an interesting past of kind of all over the entrepreneurial spectrum. And can you share some of that with our listeners so they can get to know you and get to understand why they should be hanging out and listen to what you got to say?
Sure. So I've always had an entrepreneurial spirit. Even as a young kid, I was constantly kind of creating businesses and business ideas. Went to college. Decided to go work for some in corporate America. Started out with Deloitte professional services firm, doing financial audits of Fortune 500 companies, but always had this entrepreneurial kind of mindset. And even then, I would go in rooms. I was supposed to talk about the accounting, but then, hey man, why are your sales going up, or why are your sales going down? And they start talking to me about innovation, and I'm next thing you know, I'm at the R&D facility, like checking out the new products. So I've always been business minded, and got to a certain point in my life that said, hey, you always wanted to open up your own business and do some stuff, but you haven't. So you're not getting any younger. You need to start doing that now. And so about 2019, I started my entrepreneurial journey. Didn't start with Polaxis, but started with another venture, and have kind of transitioned into this and still looking and doing some small stuff here and there. So I'm an entrepreneur at heart. I'm a business owner at heart, and I love it.
So is that your first foray on your own and as an adult into the business realm? Was it a franchise?
Yeah, it was a franchise. So I kind of took a year, again, kind of recognize, hey, if you're going to do this, you better start now. If you're not going to do this, fine, but let the dream go. And took a year to figure out what I wanted to do, looked at a lot of different opportunities and settled on franchising. I thought it would help me out versus me trying to figure everything out on my own. And so did that. And that was the first venture. Thankfully, kind of had other stuff, other skills, the skills that kind of helped me with Polaxis today.
Mhm.
But that was my first jaunt in entrepreneurship.
Yeah. So what in the world had you choose that? Is it just something you do yoga regularly, or is this you just seen a good business?
So honestly, I'd done yoga before, but it was kind of intermittently.
Hmm.
Part of the reason why I liked it was something that was helping people, right?
Hmm.
So a business that's helping people versus hurting people, I thought was pretty cool. And I thought, hey, if we can do something, I like the story, I like what they were doing. The other thing is, I'd kind of tried yoga here and there, but I never really found a place that I kind of thought was home.
Yeah.
It was either, I'm the only guy in the room, I'm the only person that doesn't look like anybody else and don't feel very welcome, or it's a little bit like pseudo spiritual that I'm not getting down into
Right.
or whatever. And I think that's what I liked about our brand was it was truly yoga for everybody. And so started it. It was actually kind of cool because what I kind of realized is a lot of our members were kind of more the regular people than
Right.
the people you would think are yogis. There's a lot of people that got into yoga based on some type of injury, and that was very just interesting to hear the stories of car accident. Couldn't move my right arm. did yoga, and now I'm doing handstands because of just the flexibility. So it's kind of cool to just sit there, and that was one of the best parts was talking to our members, talking to the people that were into yoga and the why behind, hey, why'd you get into this?
Cool. I'm into all that spiritual and all the meditation and stuff. It's because I find using it, I use less any type of psych meds. I'm a happier guy.
There
So,
you go.
right, instead of, having medicines and all that stuff for my
Yep.
anxiety and other issues you get when you get old and military and
Yep.
everything I've done, yeah, I try to meditate it away. And I just is like the second or third time I'd ever tried yoga in my life. And trust me, I'm a big, heavy dude right now. I'm on the floor and when I was young, I taught martial arts forever. I could do the splits and touch my toes and all that
Oh,
crazy
wow.
stuff. I get down the floor and there's things I can't do that I just knew I was able to do. And like, it was just miserable. No, it's cool you went down that path. What was the lesson learned from it? Like you went from Deloitte to yoga studio. It's like I don't know if you can go any more polar opposite, right? It,
Yeah. In fact, there was a guy that he was one of my clients at Deloitte, and
hmm
when I changed on LinkedIn and said I had a yoga studio, he reached out to me and is like, "How in the world did this happen?" Now, granted, this was like
he's thinking
15
mental
years later, but
breakdown,
he was,
right?
yeah, it was like, why? And like, and given my personality and kind of how I am, I think a lot of people were like, "How did this happen?" But there was a lot of things I learned. A lot of it is you kind of have especially coming out of corporate, you can have a corporate mentality where I was always in finance. I dibble and dabble in something else, but I'm a finance guy, right?
hmm
You have a hard line, you're finance, these are operations, that's legal. When you're owning your own business, there is no hard line, and you have to enjoy today I'm doing legal, 5 minutes from now, I may be doing some operations, I may be cleaning the toilet, 30 minutes later, and I liked that, but I didn't understand how deep you have to get into it. You have to be a part of everything. And so,
Right.
I kind of thought I'm a finance guy, I don't know how to sell. I'll leave sales to other people and I'll do kind of everything else. And I quickly realized, no, I have to be able to understand sales enough and to work hard enough into it that I can help my team be successful. So it was really that, I thought I was a generalist until I owned a business and then realized, no, there's a whole lot more that I need to be involved
Yep.
in. And, you can't just let your employees do everything. You have to have a sense of this is the direction we're going. And you're not always not going to have experience in it, nor are you going to be the expert in it, but you have to be able to add value. And I would say those are probably the biggest things that I learned out of the experience. There's a whole lot I learned. Those are probably the biggest ones that I took away from it.
People on this come on the show all the time and they talk about buying companies, selling companies, buying franchises, and I always explain, I always have to get in on the buying franchises. There's two different ways of buying franchises, right? The first one is what it sounds like you did. You went to the franchisor, bought a license for it, found your
Yep.
location, went through their training, and you started with 0 people in your room, right? That is almost as hard as a startup. You've got some guidance and stuff, but you got to get first client. You got to get product market fit still right, even though they have maybe a national product market fit. Did you provide the right location? Is your town right? Is your
Yep.
vibe right in that area that's going to draw all customers and want to be there? I'm from Redneck, Oklahoma. Maybe now, but 15 years ago when I was in my entrepreneur journey, if I would have went to one of my small towns and popped up a yoga studio, they would have went in there and asked if it's soft serve, right? Yogurt, So those rednecks don't know what yoga is, right? I grew up in a town that had population 700, Kellerville, Oklahoma,
Wow.
right? The next town over, just a few thousand, 15,000 or so. So it wouldn't have been like the product market fit still has to do that. Now, there's a second way to buy a franchise. You got the guy who's owned a franchise for 15 years, he's retiring out, and you buy one that has 100 clients. They're profitable. I still think that model's better because you get to go in and go through the training. You have to go through the franchise training or you can't run it. And you step in and you have existing cash flow and existing things. You get to see how it's always been done. You see the sales script and everything else. People are already doing referrals and bringing people in. And you got a little more leeway to figure the rest of the stuff out instead of you're just kind of on your own getting customer one, right?
Yeah, and I totally agree with you. And if I would have done it over again, whether it be a franchise or not a franchise, I probably would have bought an existing business because to your point, you're at least starting with something. And I think that's the thing. And even as we talk to prospects and even our clients that are franchisees or starting a business, I always tell them, hey, when do you think you're going to actually break even? And I always say double it. What do you think your construction costs are going to be? Double them. Because to your point, you're literally starting from scratch. And there's a lot of things that go into that. Whereas at least if you bought a business, you have something there and you're hopefully taking it over the edge. Now you got to be really good though when you buy a business that you're not buying someone else's problem that can't just be fixed. But so you got to do your diligence there. But to your point, you're not starting from just a blanket, and unfortunately my wife works, so I was kind of in a better situation, but I had a lot of people, they leave their good paying corporate job to start a business because in 6 months I'm gonna be making $200,000. That doesn't happen. And now what do? Right? Because now you can't pay your mortgage and you have this business that's losing money and you quickly go into a spiral. So yeah, I agree with you. I think buying existing businesses can really be less stressful.
Absolutely, absolutely. Now you went from Fortune 500 to owning your own business, and now you take on clients you've seen the full spectrum now.
Yep.
You know, what do you think is like kind of the biggest myth that small business owners have around the phrase franchise, or I mean, finance or accounting? Because I know a lot of the ones I look at, especially off market deals, they just don't have good books or accounting. Like just they just don't.
Yeah, I think it's just a lack of understanding of the importance. Kind of two things. One is really what are good books? What's a good finance structure?
Hmm.
I think is one. And then I think the second thing of just not thinking it's important. I think those are really the two biggest myths. On the not important, I think oftentimes the biggest issue is we just need a tax return. And while that's good, that's a compliance function, but it does not help you. If you're trying to exit a business, does not necessarily help you understand how to run my business better. And we see it all the time. New clients or people that talk to us. Well, I want to get a loan. All right, well, show me your last three tax returns, and you got a loss. Well, you're not going to be able to get a loan if you got a loss. Well, I don't want to pay tax. Okay, well, if you don't want to pay tax, that's great. But if you want a loan, you got to have income.
Right.
And so helping people to understand it's really beyond that. And that's what you name any Fortune 500 company, they just don't have the tax department. They have other departments that are helping them to make decisions. And so I think that's the other side of it is accounting, finance, your books are more than just what happened. It's how do I make a good decision? I look at stuff, we have people that come to us with deals here and there. And it's interesting how you can see somebody that's losing money for 4 years and their numbers look exactly the same every year. And for me, that's hard because I'm one of these people, I'm kind of like you, I want to solve a problem. So if I lost $100,000 in year one, I can guarantee you my P&L is going to look different in year two because I'm going to try something different.
It
I
might
may
be
still,
more, it
the
might be
result may be
loose.
the same. The result may be the exact same, but I'm gonna try something
Right.
different. But when you look at these books, you're losing the same amount in the same areas every single year. It kind of lends to you're not trying to solve the problem differently. And I think that's where financial professionals, people that are good with the numbers, that's what you need to be able to do is, hey, let me figure out what I need to do to either make money or make more money or to be more efficient.
Yeah, I've seen the whole gamut of it, right? I've seen so many business owners where they go, "Oh yeah, that's not." Yeah, you looked at my last 3 years bank statements and my last 3 years bank returns, but that's not really the financial story of my business. I'm
Right.
like, what? Oh yeah, we have a retail arm too, and I was like, yeah, what does that mean? Well, that means we have a lot of cash that come in, right? And I'm like, okay, that unfortunately I can't give you any evaluation on cash that you've never put in your books, never put on your accounting, never paid taxes on, and like that, you hurt yourself, right? And they say you can't have your cake and eat it too. This is like, if you do the math, I forgot what the math is, but you're saving basically, you're trying to save 25 cents when you could be making, $3. So,
Yep.
if I'm buying a company at 3x, 4x, 5x, for every 25 cents or 20, 30, say it's California, say it's 33% you're saving on the dollar because of your taxes, right?
Yep.
You're saving 33 cents on the dollar. You just spent 33 cents or saved 33 cents, but when you go to sell it, I would have paid you $5 for that dollar,
Exactly. Yep.
right?
Yep.
So, you really hurt yourself. So, and it takes, I need to see 3 years of steady of it. So you got to pay your taxes. You got to, record every dime for the last 3 to 5 years, and then you get buyers interested.
And
So
then to your point, I think there's also a piece of just credibility. I've had some clients walk away from deals simply because of stuff like that, right? You start hearing things that say, I don't know that I can trust this person, and trust what they're doing. And then you buy the business and you have to deal with maybe some of the things that they've been doing that are not trustworthy. So you want to it's just like anything else, a job interview or anything else. You want to put your best foot forward and telling people, oh, those are the fake books and these are the real all that kind of stuff just doesn't help you if you're trying to exit.
yeah, like
It
if you
doesn't
lie to
build
the
any type of
IRS,
confidence.
I always my gut feel is if you lie to the IRS, what makes you think I'm not going to believe you're going to lie to me?
Yes.
Right?
Yep.
I don't have any repercussions to give you, really. I just either
Right.
say yes or no, or I guess if I bought it and I found out you lied, I could sue. But I'm pretty sure if you're good at hiding money from the IRS, I'm never going to find it. So
Yep.
let's put on our thinking hats. Let's do one called let's do a little segment where like spotting the landmines. When you're looking, what's the sneakiest way that you think that a lot of these guys hide things, or when you're looking at books and stuff? And I don't know how many businesses you've evaluated for sale, or they're thinking about taking to the market and stuff. But when they go to correcting things, I've seen some pretty sneaky things that are ad backs. And what are some of the red flags you've spotted over the years that this just buyers should be aware of? You see something like this, it's a red flag.
Yeah, I think that there's definitely ad backs. You should question all the ad backs, and I kind of have a little bit of a because I work both buy side and sell side.
Mm-hmm.
So there's being aggressive on ad backs that I think is just okay. I got that, and then there's all right. You're being devious. You're going from mischievous to devious, right?
Right.
Mischievous, I don't have a problem with because I may be a little bit aggressive on ad backs one way or the other, depending on how my clients are. So the ad backs, I'm kind of a little bit, um, I'm kind of, shaky on. But things I've seen, especially with people that do prepare, so you have the people that don't prepare at all, but people that do prepare I think you kind of got to look at all of a sudden the business just gets much better, right? It's been steady, and then all of a sudden things change. And well, why was that, right? Their customer count didn't change, their membership count didn't change, but all of a sudden things are getting better. Are they somehow not paying certain expenses to juice up? Because to your point, hey, if I can get another dollar, I really got $5. Are they doing things to push things down the road? And oftentimes that comes down to compliance, to be honest with you. So I've seen people that they stop paying their payroll taxes, they stop paying their state taxes or IRS taxes, and funnel that money back into growing the business. While that's great and it increases EBITDA, if you go, depending on how you structure your deal, you may be the person left with, those liabilities. And so, I think you have to kind of look at. So that's one that I've definitely seen that has caused me a little bit of, all right, this doesn't seem to make sense. People doing the same thing with rent or whatnot. They negotiate some free rent, then they jump everything back in the business, and then they try to hopefully quickly sell, and you're the one that's going to be kind of stuck with the ramifications of that. So anytime I always see just like significant increases, I'm all right. Some in right. Let's dig into it a little bit more. There's always an environmental, depending on what type of business that you're in. I've seen a lot of environmental issues, but I think people that are again, you have the people that don't prepare and or maybe don't understand the finances. There's only so much that they do, but it's the people that kind of get it that sometimes they get real sneaky, and it typically is around state and local taxes or some type of compliance issue.
I'll share one of the ones that I stumbled across that is a good one, and then we'll jump into this what you just mentioned. You said something about having the same number of clients, but their business is growing,
Yep.
right? So it's been almost 2 years now. I was really digging into one, and I couldn't figure it out. They had the same number of clients, but all their clients in the last about 18 months to 2 years were growing like mad, ordering bigger and bigger orders, right? And I was like, they're just like, yeah, everybody's growing, but him, technically, he's gotten, maybe landed one or two more clients, but something was fishy. And I just happened to have a conversation. One of his sales reps actually owned a bunch of the companies, he like 38%.
Hmm.
So he allowed me to talk to the sales rep because the sales rep he knew to sell. And I started asking questions about sales and how are you guys going about selling more and more to these clients and these customers and stuff? and they'd been doing discounts and stuff. He said he honestly broke down and towards the end. He said, any day now they're going to just say, "Hey, we got enough inventory here. We're going to last for a while. We
Yep.
can't buy anything else." So they've been stockpiling all their
Yep.
customers to make their books look good. And then when
Yep.
I get a hold of it, they're going to go, "Whoa, we don't need anything for 6 months.
Yeah.
We're
Yep.
overstocked." Right?
Exactly.
And it was
Yep.
inventory. I don't know. I called it inventory stuffing, but I didn't know what the real term was. I'm not an accounting guy, but they're stuffing inventory in their customers to make their books look good.
Yep, yep, and that happens, and sometimes that happens, that I've even had that issue happen just in corporate America.
Mm-hmm.
Not that we were doing anything fishy, but certain circumstances happen, right?
Mm-hmm.
And even, with the yoga studio, there were some people that were doing, something kinda similar to that, where they were dramatically discounting, the memberships. And so, hey, all of a sudden, you're growing at 20, 30% a month. Well, that's because you're discounting the memberships, and then they would do well, you don't have to pay for, 30 days, 60 days, 90 days. So everything looks great. Well, something in right? And so to your point, I think you got to look at the metrics, what's happening with the business, then what happens. It's a story. Then do I see that in the financials? And if not, you got to dig. And to your point, kind of having conversations with more people kind of generally helps. Um, Sometimes customers, sometimes other people within there. But yeah, I think a lot of people figure out, hey, I can juice my sales, or I'm going to just stop paying people and juice EBITDA.
Another thing you mentioned there are the amateurs, right? Seller prepared financials, are they harmless or are they a loaded weapon, right? They can harm both sides, right?
They certainly can. Certainly, yeah, I've seen financials that they just don't make any sense. There's nothing nefarious that's going on, but you don't have financials that are putting you in the best light. And so, if I was going to go and meet my mentor or someone that some celebrity that I loved, I'd probably wear something nice. I'd put on nice shoes. I'd make sure my hair was cut. I just wouldn't show up just naturally. And for some people, hey, that's just who I am. But again, you're trying to get to a result, right? And so it can actually be a negative thing of, hey, I'm showing you everything. Well, that's sometimes isn't the right thing either. You can scare people away by being too honest sometimes. And so you got to have financials that look a certain way. You got to be able to tell a story. But then to your point, you can also hide things by being a little bit too cute or knowing kind of, what you're trying to do. So diligence is really, and it's not just financial diligence. You need to have legal diligence. You need to have environmental, if that makes sense. Everybody misses, sales taxes. Everybody misses local taxes. Those are things that matter. The IRS matters, but the states matter just as much. You got to look at all those kinds of things and look at the metrics of the business, sales, members, units sold, those kinds of things.
Yeah, you brought up something real important there too, is the landlord issue, right?
Yep.
My wife and my son run a little catering business. They make dessert pancakes called Miss Pearl's Pancake Paradise, and they set up. It's a pop up. They set up at events and stuff like that. We rent a commercial kitchen, but when I was looking around, I thought, oh, I'll just buy a commercial kitchen and we'll rent it out to other people because we were having trouble finding something close. Like, if we're gonna have to drive, let's just own it. And I seen this one on sale, and I asked him one day. I said, we were chatting with him a couple times via chat and one or twice on the phone. And I get him on the phone. I said, "Why exactly are you really selling? I know COVID hit you pretty hard, but you can bring that product back." They did an organic. They made organic chips and snacks and stuff out of gourmet mushrooms, basically. So instead of potato chips, they were made out of different forms of mushrooms and stuff. And it was popular, jerky and all kinds of stuff they did. They were in Whole Foods and a bunch of other places, but COVID kind of shut them down somehow, and then they just never recovered. But when I got down to it, the reason he was truly not trying to bring it back, he's just constantly at it with his landlords. Landlords want to triple the rent. Landlords weren't letting him sublease it out. He was going to lease it out as a commercial kitchen, and they're like, we don't want other people in there, right?
Yep.
And so I went down there. It's not too far from here. I went down there and talked to some of the neighbors that in the same building, and I looked up online like the tax records. I could see they own two other spots, a burger joint, and I was like, well, how's the spot? How do you like your landlord? Like, oh, they nobody liked him, so he couldn't sell his business to me or anybody else because nobody wants to deal with this new guy,
Exactly.
right?
Yep. Yep. And those are things that, again, I think sometimes you get caught up in I see the potential, and
Right.
that's great. But you also have to see the downsides at the same time. And you either have to have that, which is very difficult, or you need to have a team around you that can help level set you and say, yeah, totally understand and totally agree that this is the opportunity, but this is the risk. What do we do with the risk? And how do we mitigate that risk? And there's some risks that you're just not going to mitigate. There are reasons to walk away. And so there's some businesses, yeah, maybe you can relocate and the year lease or 2 years lease is not a big deal. But, if you had our yoga studio, we spent probably $100,000 in heating and cooling. I'm not ripping that out. So if there's an issue, it's just stuck.
Well,
And
lot
so you got to think about that as well.
what do you think the single quickest cosmetic fix to books and bookkeeping that can give a business owner a higher multiple? Is there something that would just, besides just having books, is there something inside of there that somebody can start doing or quit doing that would allow them to increase the value of their company? Low hanging fruit.
Oh, wow. I'm always big in, I don't know how easy this is, but I think spending money in the right areas. Even when I worked in corporate, large multinational organizations, I think every business has 3 to 4 drivers, no more than four, that really drive revenue. Yeah, you got all these other things, but these things drive revenue. What I would say is spend the money there and forget about some of this other stuff.
At least know how to
And
answer that question. I've asked more than
yes,
one business
oh,
owner,
totally.
what drives your sales? And they're like, well, I don't know. We've been doing this for 30 years. We got a brand name. Like, no. What is there? A lot of companies, they do great sales because, like, if you own a refurbished, like one of the companies was, they refurbished equipment, rebuilt carburetors for mostly farm equipment. It was in Oklahoma. But they could do any type of, they rebuilt engines, carburetors, they didn't do transmissions, or they owned but their brother or cousin or somebody owned one on the street to do transmissions. But basically, it was on the engine or part of the engine. They could rebuild it. They even rebuilt batteries, like the car batteries. They would drain them, basically refurbish car batteries. And like, what drives your sales? And like, well, the guy was like, because, excuse me, French. He's like, when shit breaks. That's all he could say, right? Well, how do you know when a customer's stuff breaks, right?
Exactly. Yep.
And this wasn't even a guy for sale. I'm naturally curious. If I see a business owner, we're chatting for a few minutes, they'll tell me their life story and about their business. And like, I always ask questions like, what makes a sale here? What happens? Like, I knew why I was there. The engine in our car blew up, right? It just died one day, and like, it was not, our mechanic said, you need a new engine. So I went to them and, said, could you pull this out and rebuild it? And it's cheaper than buying another car. But that said, he just didn't know. It was like, he's friends with all the mechanics in town, and when they don't want to fix it and there needs to be a new engine rebuilt, they call him, right?
Yeah.
I was like, okay, well, that's a driving factor. You built relationships over time, so your relationship related business. But a lot of times they just don't have a quick answer.
Yeah, and I've actually had when I was I've interviewed a couple times at businesses in corporate America, and I mean
Mm-hmm.
I've had public company CFOs, and I've asked them this question: What are the 3 drivers of this business? And 30 minutes later, they finish the answer,
Mm-hmm.
and I'm like, How do you not understand? It's got to be three to it's and if it's not 10, it's not 50, it's 3 to 4, and focus your money there. And so I'm an accountant. I love getting paid, and I love my clients paying me, but at the same time I have some clients you don't really need to spend a lot of money on me because I'm not the driver to your success. I can help you out tremendously, but you're not spending enough in marketing and you're spending too much over here and too much over there. And so I think really, spending the right places in the right your money in the right places, I think is key. It drives plus it kind of it's gonna change that EBITDA. So there's small things like insurance. I always tell people you need to call your insurance guy every 2 to 3 years and see what you're doing. If you haven't done that, you're probably paying too much. But really focus on those drivers because that's what the outsiders are going to care about, right?
Right.
And that's really where the value is.
Everybody's always focused on these things they call them key performance indicators. And what the problem is, if you look at what they're calling key performance indicators, they're failing to recognize there are two different things, right? There's leading indicators and trailing indicators. Revenue is a trailing indicator. It's hard to impact revenue when you go, okay, well, revenue's 30,000 this month. It was $25,000 last month. That's awesome. Well, next month it's 20. It dropped back down. it's a trailing indicator. You should have been able to see what's the leading indicator that causes revenue to fluctuate. Is it the number of calls that come in? Is it the number of
Right.
marketing? Is your marketing spend went down? What are the
Yep.
key factors that can cause those numbers to do that? And a lot of times they don't know. They just are like,
No.
they know their revenue. They might know their EBITDA if they're working with somebody. They know, all these other things. But like, I want to know what your leading indicators are, right? You know,
We had, and to your point, so I've done a lot of work with KPIs and key performance indicators in
mm,
corporate, and I was always, when I got into a new company and they had like 3 pages of KPIs, I was always kind of like, there's no way in the world we got 3 pages. It's got to be one, guys. It's got to be one. So we would work down, and
mhm,
may take me, several years to get there, but everything can't be important. If everything's important, nothing's important, and there are things that are more important than others. They just have to be,
yeah,
and so you have to know those things. Even in the yoga studio, we would always talk about members, 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 and members are great, but there's a whole gambit of how much discount, what type. We had 3 different types of members. So if I got 3 different types of members, and one is almost double, the third is almost double the first, why does it matter how many number of members? If I have more of the higher value members, I don't need as many members to make the same amount of profit, right?
yeah,
So to your point, you got to find really what leads and what trails. What I got to at the yoga studio is, this is how much revenue I need to break even.
right.
Now, how I get that revenue, I got 3 different members. I can sell retail. I got this whole gambit of, I got its menu.
Hmm.
But at the end of the day, I need this amount of money, and I want to have as much of that as recurring as possible. So let me also look at members, but let me look at my attrition rates, because if it takes me, and we kind of did this, I found this out over time. You spend a whole lot of money getting a member, and then they stay for 30 days. I lost money. I
Right,
didn't
because
get
your
that
customer
money back.
acquisition cost, right?
Exactly.
That's
So
another
because
thing.
your acquisition cost is so high that it doesn't really work out in the long term. So there were certain sales I purposely wouldn't run, because it wasn't really getting someone that really wanted yoga. They were just doing it because it was cheap, and that's not going to help me in the long term. And my
Right.
customer acquisition cost is not gonna. It's going to take me 3 months for me to break even, for them to be a member to break even, and they're going to be here 2 months. So I'm losing money. And so to your point, you got to look at what's going on in the behind the scenes to be able to say, hey, this is generating, this isn't.
The other thing I see missing all the time with small business owners, and probably was missing in your yoga studio, I'm not gonna throw the acquisition I'm not gonna accuse you of this, but it's very likely, is not understanding how the bottom level evolves into the top level. What is the pathway? What do they need to experience? What do they need to get out of in that bottom level? What do they need to miss and feel like the fear of missing out, that they're missing out on that next tier, right? They need to experience a while to keep them to stay there, right? Because you don't want the tier, your general tier one person to come in for 30 days and leave because they didn't cover your customer acquisition cost, right?
Yep.
But you also want to know that if they experience this type of experience and they see tier level two and they don't get to do certain things that tier level two gets to do, and they
Yep.
miss out on that a little bit, that they're 30% likely or 40% more likely to make tier level two. And then the same way, how do we evolve them to the luxury suite, right? They're the best of the best confident. In some industries, that tier suite should be so high that only a small percentage of your customers could afford it anyway, right?
Yes.
In other industries, if you're just going like standard tiers, it's just like another thing. It's like, okay, they're missing out on, like, I'm an easy sell. If I look at something and go, this is free for 30 days, and then this is $15 a month, but if you pay $30 a month, like, I know I'm going to make it to $30 a month, and I don't want to deal with the thought process again. I want to get this thing done, so I'll just go. And then, but, or sometimes I look at it and go, all I ever need is the bare minimum of this product. It's filling a gap that I have on something else I'm already using, so I'm going to stick around with there. But, not knowing that path, how do I educate slash grow slash develop a customer A, who is in tier one to tier two to tier three, you know.
And I think that's the thing, kind of to your earlier point on, starting a business from scratch and having something that's already there, regardless of the franchise and the model. Every single location, every single 3 mile radius is slightly different. And so you got to tap into profiling your customer. And that's even something I do now. And I try to encourage my clients to do that. You have to know what your customer looks like. You have to know what they look like. Just can't be, and I fell victim to this a couple times in corporate. We can just get 1%, right? There's 100,000 people that live there. We just get 1%. That there's no actionableness there.
Right.
Who is my customer? What is their age? What do they like? Am I going for the luxury customer? Am I going for the customer that just, hey, they need to get something today? You can make money in both instances, but it's very hard to market to everybody. You really have to be pinpoint and say, "Hey, this is who my customer is. Yeah, those are great, but this is who my customer is." I am not going after AT&T. AT&T can, AT&T called me and said, "Hey, we want Polaxis to do some work." Great, but I cannot win going up against Deloitte to try to win some work at AT&T. I don't want to, but I couldn't do that, right? So I have clients, they just constantly spend their money trying to go after something that's just flat out unattainable, versus, hey, who is my customer?
There's just so much to understand inside of this. You've been from the big side of the business down to the bottom. And owners love to brag about their revenue and how much their buyers care about their businesses and stuff like that. But when it all comes down to it, it's the numbers are the one that tell the story,
Yep.
right? And growth is something where, as buyers, the business buyers, not their customer buyers, but the business buyers, we're looking for repeatability. Can we do what you did? And often we have a little bit of ego on us. I hope mine's mostly handled these days, but like we think we can do it better than you can,
Yes.
right?
Right. Because if they didn't, you wouldn't. And so there are some things, and I've told some people before, it's okay to not change that
Mhm,
because you want a little bit of meat on there.
mhm,
And you want to help people to say, yeah, hey man, you can do that much better.
mhm.
But yeah, that's part of it. And again, I think that's part of the sales process. I've had some engagements in the past where every time the buyer would say something, they took offense. It's like, no, 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 no. You want them to think they're smarter than you. That's why they're going to pay you this money. And if you are smarter than them, they're not going to pay you. So let's keep focused on the result.
Let's remind the
Um,
the buyers out there though, real carefully. You need to check your ego a little bit. If you think you're
yes.
stepping into a company that the owner's been running it for the last 30 years, and you're going to fix everything that he ever did wrong in the first 30 days, you're going to mess some things up. Plus, your customers and your clients are going to hate you, right? I always
And
tell people,
potentially your employees.
yeah, yeah, absolutely. My rule of thumb is don't change anything for the first 60 to 90 days, and
Yep.
then start looking for things. You ask all your clients, and your employees what they think you need to change,
Yep.
right? And start with those items that are on that list that mirror things you need to change that you've seen. And then after that, you'll have trust and rapport with everybody. You can start making some of the other minor and even major changes. But I've interviewed a couple guys where they lost the entire business because they went in and fixed everything in their first 30 days. And one guy had 21 software engineers in South Africa. He said the whole entire company left. Every one of his employees left within like 3 weeks. So,
Yep. Yeah. When we were doing mergers and acquisitions in corporate, that was always one thing that we would look at
mm,
is what's the human side of this.
mm,
I've worked at two companies that were sold, so it's helped me to understand all of the emotions that go with being in a organization that you thought was great that no longer is going to be there, and your boss is changing, and you may have to go to a different office or even a different building, and managing that change is huge. And when people start looking, it's kind of hard to stop them. And so to your point, you're buying this thing, you're buying customers, you're buying vendors, you're buying employees that are a baseline to help you get there. But every misstep in those buckets only makes it harder for you to get to where you need to be. And so to your point, kind of need to be a little bit cautious, need to figure things out. There's ways that you can do. We were always big in, hey, let's go there, let's talk to them, let's throw a party, let's get to know them. Because the more you can do that, the better you kind of stave off, oh, these are the bad guys. And that's who you're gonna be.
yeah.
You're the new owner, you're the bad guy.
Oh man, and it's a rapport building game. With buying the company is a rapport building
Yep,
company game. Managing a new culture and a new environment and new employees is a rapport building game. You got to build trust and rapport. Let's
yep.
talk a little bit about like kind of how does a company evolve from startup to, Deloitte potential client company in the realm of corporate finance? Since you've seen the whole spectrum, right? Where do you think in the life cycle of a company, I've started something up, do I need a bookkeeper versus an accountant and a bookkeeper versus a bookkeeper accountant and a CFO level type of person? I honestly think there's revenue marks. In my head, I have it painted out anyway. The picture I paint is there's certain revenue marks where you really probably should can afford to and probably should have different tiers of expertise come in.
Yeah, so I don't have revenue marks, but only because I deal in multiple industries, and
Mm-hmm.
I think depending on the
Right.
industries and the complexity of the operations, you may need it. So, if you're a one man painter, you may be able to make $3-4 million a year and not really need much more than a bookkeeper. You may be able to, if you're great in Excel, you may be able to do it by yourself. You can make $500,000, but if you got manufacturing and you have this and you have this and you have this, okay, now the level of complexity kind of increases. I would say, the first thing is you have to, as an owner, you can't do everything. So you have to decide where you're going to lean in and where you can find somebody that is going to take a load off and allow you to spend more time to lean in. I think, for most people, accounting should be part of that. The other thing you should have is someone to help you make some decisions and help you think through some things. And so I think the fractional route, we do a lot of fractional work with our clients where we're part-time bookkeeper, we're part-time CFO, even, and I've done this. I've even just spent, all right, I'm gonna spend $300 and we'll talk to a sales executive just to figure out what do they know that I don't know.
Mm-hmm.
And so I think it does depend on the industry. Unfortunately, you need to be able to get the compliance done without you being intently involved. I think is key. That's sales tax, that's workman's comp, that's payroll, those kinds of things. And then I think once you get to 1 million, 2 million, 3 million, you really need to start saying, am I making decisions, or is this historical view of what happened 30 days, 60 days, 90 days ago that kind of by that point doesn't really matter, right? And so then you need someone that is going to help you again make those forward looking decisions. Where are we going? Is this helping us to get where we're going? Those kinds of things. So I don't know if I'm answering your question 100%, but um, I think those are the two big things I would say is, can I get my compliance? And then am I really getting questions answered that help me run my business better?
So let's just give a hypothetical. Somebody's listening to the show right now. They bought a company a couple of years ago. They're getting ready to sell it. What is that, you know, 90-day finance makeover? What is that day frame where they would hire a guy like you, come in, clean up everything, make everything look perfect so they can prep the best light for like making a quality of earnings team just drool because it's just done, right?
So part of it is, all right, and that depends on what the revenue is. But if I'm looking for a quality of earnings, like, do the financials make sense? We run into balance sheets that don't balance. Your assets have to equal your liabilities plus equity, and if they don't, we got a problem. Inventory. You're a company that's inventory focused, and inventory is the same number for the last 10 years. There's a problem there. Inventory's got to change, even if it's a dollar, right? Inventory has to go up, go down. Same with payables, same with receivables. And so we would come in, try to help you. What are the big things that impact your business? If you're a software sales and you have people's credit cards, AR shouldn't be a big deal. We're not going to spend a bunch of time there, but maybe we really need to look at revenue recognition. Are you counting all of that? Someone pays you in January for 12 months. Are you counting all of that as revenue? Or when in reality, they could cancel at any point in time. And really, we need to be creating a prepaid or something like that. So really kind of having a financials that match the business that's at hand is, I think, key. And that's what we would kind of help you with. And I think the other piece then is you have all the supporting documents to help. So if you're going to go through a quality of earnings, they're going to say, great that you have inventory, but let me see your subledger of every inventory item. And if you don't have that, that's going to be a problem. So, hey, maybe we need to go in and dig on that. Does your subledger actually equal your GL? If it doesn't, that could potentially be a problem. We need to make sure that we have that, because it's going to be there's going to be a whole lot of requests to the extent that that stuff can be done and done early. then now you're not scrounging around trying to find bank statements and realizing, well, wait a minute, my AR doesn't match. I got a problem. Those aren't things that you want to be in the middle of the transaction doing. And I'd say the last piece is the story. What's happened over the last 5 years? Why did the business go up? Why did the business go down? Some of that may be key performance indicators, membership numbers, sales numbers, widgets, number of customers, customer concentration. These may be things that we need to have. And again, now we're leading with the story versus, oh, great question. We'll get back to you and we'll tell you in a minute.
Given all that, if somebody has decent books, they're keeping records, they're focused on EBITDA, they know they're going to sell this thing. What's the window that they need to before they work with you or somebody else? Because they know if they're selling to PE or something in particular industries, a quality of earnings is basically required, right?
Yep.
If you're going to sell to PE in certain industries, some industries they know kind of if you're selling your mom and pop plumbing company to PE, they're probably going to get away without it. You're
Right.
selling, a professional services software company. There's some other stuff out there. They're going to do something equivalent to a QOE. So having one is essential. What does it look like? What's the time frame they should like reach out to a guy like you or your company or to do that prep work, right? You need 90 days, 180 days. What do you a full 12 months? What do you need to for most companies if they're in decent shape?
If they're in decent shape, I would at least say a year, because the way I view it is you also don't want it to be a certain way and then all of a sudden it just looks a lot better, right? Because
Right.
then people are they can see that. A lot of people, every kind of house has a different view.
Mm-hmm.
Some people are going to take last 12 months. That's kind of typical.
Mm-hmm.
But you have some buyers. We have some clients that do average of the last 3 years.
Right.
So if the last year is great, but the last 2 years, I don't have the information, we don't have bank statements, then we got a client that wants 3 years. Hey, this isn't going to help us. So I would say at least a year, maybe 2 years, if you can, but definitely 90 days at least to be able to go in. And unfortunately, what you don't want to do is be in a process and realize I got a problem with my books.
Right.
That's not the right place, especially if you're in the middle of an LOI. You have an interested buyer, they're looking at it, and now they're probably going to go away. And now you need to take time to fix it. That's just not a place you want to be in. So earlier, it's rather that doesn't mean that's all work, but at least to be able to find somebody and then to take a step back and say, yeah, you're in pretty good shape, or hey, there's a lot more work here than you think.
What else? I've asked you a bunch of questions. What have I missed? What kind of questions should I be asking you?
Oh man. Geez. You've asked a lot of great questions. I'm trying to think through how important is it to have a team around you, I think is one, or even a broker.
Mm-hmm.
I honestly think I know a lot of people, especially as the lower valuations, they want to do everything themselves, but I don't think that's actually helpful. I think you need somebody that's independent that can also say, yeah, this is a good business, right? Versus just the owner. They're always going to tell you this is the best thing since sliced bread, but you kind of need some people that are independent. And then I think you still need to run the business. And so you need some people that can help depending on the industry, depending on what you are, depending on what you want to get out of it. Marketing a business may be a full-time job, and that's not what we do, but you need someone that is out there that is fielding some of this. And again, not that it's coming to you. You need a buffer zone. And sometimes, I have engagements where, all right, guys, I'm gonna go in. You guys have this issue, but let me say it because I'm the independent person.
Yeah.
Whereas if you guys say it, it may create some issues and hurt some relationships.
I can tell you from the buyer's perspective, and I've interviewed a bunch of buyers. I'm hanging out. I have a WhatsApp group that has 150, 200 buyers that hang out in there. We would much rather, in all cases, have somebody on your team, a seller's team, that truly understands their financials and can answer any question about the financials than we would ever care about what you have as a broker. We, I can tolerate your broker if you have the finance guy, but if you don't have,
Got it.
if you have a great, you could have the best broker in the world, and if you don't, and if he's blowing hot air at my butt about your financials, but can't answer the detailed questions, you're going to lose the deal. And the
Yep.
same goes the other way going around. You can have the best financial guy in the world. He can answer every question about that, and the deal will get done without a broker. Now, I still think you need a broker. I think you need a broker. Don't get me wrong. If you're out there and you're thinking about selling your company, make sure your financiers are solid. Work with the find you a financial guy that's comfortable in the mergers and acquisitions conversations, because there's some
Yes.
tough questions buyers are gonna ask. Then pick a broker that's okay working hand in hand with that guy and communicating with
Yep.
that guy, because that's what we want to see. It's at every buyer I talk to. We want good, clean, solid financials. When we get lost in your books, because everybody does them different, we're going to get lost in there looking
Yep.
around, stumbling around.
Yep.
We want somebody who can tell us what the story. What is this you're trying to show me here? What's the story you're trying to tell? And then usually we're going to have somebody on our team that's really good with financials that will tell us, here's the story we get from reading these financials. So
Yep.
reading financials, I told you this before we hit the record button. I honestly think it's kind of like reading a book. A person really great at financials can sit down, look through some of these financials the last 2 or 3 years, spend maybe 30 minutes to an hour, sometimes 2 or 3 hours, and come back and go,
Yep.
here's the story that I see from this.
Yep.
And they can tell you almost the same thing that the business owner tried to tell you in the interview. We had
Yeah.
great 2019. We had great this.
Exactly.
Inventory struggles during this time frame. All the same story, but the finance guy will be able to tell that too if the books are right. And if the book story, the financial guy's story is different than the seller's story, usually something is wrong.
Yes. Yep. Yep. So from your perspective, does it matter if that person is internal or external, or is it kind of the same?
I don't care as long as somebody like thoroughly understands what's going on. And I don't think anybody that I've ever interviewed or know of friends with that are buying companies, we don't care who it is, whether you have, accounting firms. We find that easier to deal with than we find brokers. Um, a lot of the guys don't like it too much because the accounting guys, well, if our guys listening to the show are trying to negotiate creative finance, seller finance, and stuff like that, the accounting guy's always going to tell them, no, you should get a lot more money down, or you should, they're risk adverse, right? And that their job is to, as an accounting guy, as an attorney, as a lot of these professions, your job is to protect that client,
Right.
right? Well, there's more protection if the buyer gives the seller a bigger down payment, right? And most sellers, including myself, will want to try to minimize the down payment so we can go get a second one or a third one, right? We're trying to give as little money up front as possible so that we can grow by acquisition. We can do three or
Yep.
four. So that said, I still think hands down, having great financials and somebody can answer questions about them will win you more heart and rapport and get you further down the path of a sale than having the best broker on the planet.
Yeah. No, I agree with you. And I think you said something I'm gonna piggyback on is having someone that understands the process.
Hmm.
And so your tax preparer may not be the best person for an M&A transaction. I can't tell you how many deals where, well, they're busy with taxes after April, it's December. Yeah, in April they'll be able to work on this. Well, my buyer not is not going to be here in April.
Right.
And so you need to have someone that understands the timing and to your point can speak to the story. And quite honestly, I love my profession, but that's where my profession is needs to get better. Is we'll tell you all we're complying with this accounting pronouncement, that accounting pronouncement. That's great, but what's the story? And somebody that's been through this to be able to tell the story is key.
Yeah.
And then to some degree, I try to coach my seller clients. Hey, this is what you got to be able to say.
Yeah.
I can say it, but this is what's happening in your business. You have to be able to say it. So do you have an issue like something like sales? What happened with sales? Sales went up, sales went down. Would you have an issue if the accountant answers that and not the owner? Or if the owner says, well, my accountant can answer that? Would you have an issue with that or would you be okay with it?
I want to hear both stories and I want them to align to some extent. I want to hear from the sales guy. Well, sales went up, and the sales guy's going to tell me things like, well, we spent less on marketing, right? Or he could even tell me, like, looks like we had less on the sales team had less salary that for the last 2 quarters. So it looks like we lost a guy. Right? There's a story told. Like a great accountant or a financial person can go look at it and go, hey, yeah, this business is a solid business. It has ups and downs, has some inventory issues. We have Sometimes we run into issues with,
Yep.
or it's got some good turnover. They can see the turnover because they see the payroll,
Right.
right? They can see the turnover. They can see growth because they see payroll increased, right? And it's not just commissions. They can see that it's broken down in salaries and workers' comp. They see all those numbers going out. So they go like, we're growing in, or the company's growing in people. It's growing in sales. Inventory seems to be steady. We don't have any, or even, this business industry, the economy looks great because our accounts receivable is being paid on time still. We're no longer getting 30, 60, 90, 180 days late or whatever. They can tell you a story there that the owner sometimes doesn't even know. I asked the owner how the business is doing. He's like, well, we're doing 4 million in revenue. I said, cool. What's the life cycle of a customer, right? From the day you run into him, you meet him on the street to the day you get paid on the invoice. What's that life cycle? Not the day you make the sale, but the day that your money's in your deposit in your account. And I don't know how many banks I've seen. I mean, how business I've seen where the guy says, we got $3 million in revenue. I was like, yeah, you got 2 million of it in accounts receivable, and 1 million of it's
Right. You haven't been
over
paying on any of it.
1 million of it's over 300 days old, man. Like that's not good, right?
No.
So like you got to fix that. So that
Would
said,
that sorry, for the question, but would that keep you from buying the company, or would you see that as a potential opportunity? Hey, this is a synergy that I can get. I can come in, I can reduce the payment terms, I can do whatever. But or would this make you say,
that would make
this
for myself and all the other advisors. I'm in the mode right now where I'm actually building something again. I'm writing software. I don't know
okay.
why I got back in that mode. So I'm kind of out for the last probably month or two. I've been out of acquisition mode and more interested in trying to launch something new, and then I'm going to acquire things to bolt onto it. So I'm writing software tools. Anyway, that said, for all the people I know, the answer would be it would just make it more affordable for me, right? Because the valuation is going to go down
Yeah.
if the owner can't tell the story, if the owner doesn't know, right? And and if I can fix it, then I'm still interested. If I can't fix it, then personally I don't do turnarounds. There's a few guys out there that I know that are really good at them. I would probably just start calling those guys up and say, hey man, here I think this is a turnaround. What would you do? And if they say no, that's going to be easy to fix. I'll come on board and help you for 10% of the ownership or whatever. I might be interested still, but you're going to lose me if I can't fix it or know a solution. You might lose me, right? But
And I think that's the thing that, especially if you're trying to sell to PE, or financial people, you have to speak their language.
yeah,
And so I can kind of speak their language. Accounting people, finance people can speak their language. But to your point, the owner has to speak enough of it to not say, "Hey, yeah," and especially me as a hired hand, I'm a hired hand.
mm-hmm,
I may not be around afterwards. It's kind of up to the buyer at that point. It does not help the organization look good and sell at the highest multiple if I'm the only one that can answer those questions. That
right.
hey, our look at our turnover, our inventory turnover has increased, and here's the metrics, and you can see that inventory turnover is increasing over time. Some of that, in my view, the owner has to be able. I can give them the information, but you got to be able to present it and look at it.
Mm,
And so many people are, what's in my bank account? Life is good.
right.
My bank account goes up too much, there's a problem. My bank account goes down too much, there's a problem. But you got to be able to have, especially when you start looking at valuations, $10 million plus, they're expecting more than just that compliance. They're just, we got a tax return.
It's interesting. I've seen so many of these where like, wow, you had a great year. You go, yeah, my wife wanted to move and get a bigger house. So basically he's the main sales guy. So he just went
Exactly
out
right.
and killed sales. I was like, or it was time to replace my bat. This is Oklahoma. The guy was like, you doubled your revenue last year because I was my bass boat died and I just wanted a new one. So I basically pulled 60-hour weeks, got lots of sales, and made sure I racked up enough cash by the end of the year I could just write a check for a $70,000 bass boat I've been wanting. I was like, why don't you do that every year? He goes, because he's out on the bass boats, what the real story was, right? He can't do it every year because he wants to spend time on that boat he just bought. That said, knowing this story, like the financial guy couldn't tell me that story. He had to. That's why I said the stories have to match,
Yes. Yeah,
right?
you're right. Yeah.
The story is like, hey, yeah, we had a great 2019. Oh, is it due to COVID? I guess probably because everybody stayed inside. Like, no, it was due because the owner wanted something and we're willing to put in a few extra hours, right? That's why I said you got to hear the story from both sides. I want somebody that really knows the financials, can tell me what they see. and I want to hear what the owner thinks happened. And I want to see alignments and misalignments, because those are the magic of things, right? Where there's alignments, there's the truth, and usually, and when there's misalignments, it's not necessarily the false, but there's room for improvement, right?
Yes.
Like,
Yeah.
so
And I think there's got to be my view of just M&A in general is if you're a buyer, you either have to get it at a discount or you have to have synergies that are going to make it better. You cannot buy a company and do the exact same thing that the other owner is, because you either have debt, you have equity holders, you have some type of bill you now have to pay that they don't have to pay. And so you got to be identifying those things. And unfortunately, and I've dealt with this in corporate as well, everything isn't a reason to walk away. There are some things you have to say, guys, yes, they're doing it this way, and that is not the right way, but you know the right way, and you can get that done. How much more revenue are we going to have? How much more EBITDA are we going to have? And even going through the process, you should be kind of creating your list of these are the synergies and this is how much. And there's documentation and studies that show that if you count those synergies and put a dollar amount to them, they're more likely to happen than just say, "Hey, we're going to go in and we're going to figure it out."
awesome. Well, I just realized what time it is. We're a little over time here, so let's do a. We could go all day. The show's supposed to be about an hour, so I think we should
Okay.
let's
Yeah. Hey,
get.
no, this has been good.
Yeah, so I don't want to kill a good conversation, but I do want to wrap this up. So let's do a couple things real quick. How do people reach out? Let's do two things real quick. Give me your top three takeaways. If somebody can only remember one or two things, maybe three things from the show today, what would you want them to remember?
Your financials are more than your historical P&L. It's a story. You need a team to help you evaluate any type of sale or definitely any type of acquisition. That doesn't necessarily need to be me, but it needs to be people that you trust that can help you through it, and start early. Those would be the three that I would say.
And then how do people reach out with you to work with you? What's the best way to contact you?
Sure. So best way to contact is email info@polaxis.co, not .com, but .co. You can also email me at rosco@polaxis.co. We have a website, but the best way to get in contact me is email. You can also, on the website, we do have our phone number, but email is generally the best. And we love talking to people. We're willing to talk to you. It may work, it may not work, but hopefully we can help you and get you to someone that can. But we'd love to talk to people.
All right, Roscoe. Thank you, man. It was fun. We got a little carried away, a little over time, but we're going to leave that all in there, and we'll call that a show. Hang out for just a few seconds after it.
Okay.